Welcome to the deep dive. When most people hear blockchain, their minds jump straight to crypto, maybe NFTs, all that volatility. It's become the synonym for decentralized finance.
It really has.
But the source material you share with us, it suggests that focus is missing the real story.
It absolutely is. I mean, blockchain is a fundamental technology. It's a distributed, immutable ledger, and its most transformative uses are happening so far away from the trading floors.
So what's our mission for this deep dive?
To cut through all that noise, we want to pull out the verifiable, the quantifiable benefits, and really shine a light on the structural changes this technology is already driving in huge industries. Industries that, impact your daily life.
We're talking about things like the food you eat, the integrity of your medical records.
Exactly. It's about pulling back the curtain on the practical applications.
So this is basically an industrial audit of a technology that most people think is purely speculative. And the core idea I kept seeing, really the takeaway from all the material, is how blockchain's basic attributes,
Immutability, transparency.
right, and decentralization, how they're translating directly into tangible results. We're talking about massive gains in efficiency and maybe the most critical part, building trust.
That verifiable trust is the linchpin. It's everything. In a normal system, you have to trust a central authority, right? A bank, a government, a big tech company. You trust them to be an honest broker.
And that trust can be broken.
Often is. Blockchain just flips that on its head. It lets you verify data without trusting any single entity. The trust is it's baked into the math and the network itself.
Okay, let's unpack that with some hard numbers because businesses aren't adopting this out of, some kind of tech idealism. They need a return on investment. What is this actually doing for their bottom line?
The impact is, frankly, dramatic. We looked at the research on adoption in digital businesses, specifically companies using it to streamline their processes, to cut out the friction.
So give us the scorecard. What are the gains looking like?
The stats are pretty compelling. Companies are reporting a reduction in transaction costs of up to 60%.
60.
60%. And transaction processing speed, so how fast a deal gets confirmed and settled, that's up by an average of 40%. And maybe most importantly, operational errors, from manual data entry and things like that, they drop by nearly 50%.
A 60% cost reduction is a stunning number. If that holds up at scale, that explains the massive industrial interest right there. But why is it so profound? Is it really just about automation?
It's the aggregation of all these small efficiencies. You eliminate reconciliation time. You don't need third-party auditors for data accuracy anymore. And the shared ledger, it just removes the information delays that plague traditional systems.
So it's sort of like everyone is reading from the exact same page at the exact same time.
Precisely. It tackles what economists call agency theory. It reduces information asymmetry because everyone has the same verifiable record.
And that shared record leads directly to the second big benefit you mentioned, trust.
Exactly. When your transactions are transparent and the data can't be changed, it follows automatically. We saw studies showing that this transparency directly correlates with higher social trust.
What were the numbers on that?
70% of consumers said they had higher trust in companies using blockchain, and 65% are more willing to do repeat business with them. It's a self-reinforcing loop. Efficiency helps the bottom line, and transparency boosts customer loyalty.
That link between internal efficiency and external trust is a perfect bridge to our next area, supply chains. This is probably the application that hits closest to home for all of us, especially with all the food scares we've seen.
Absolutely. Just think back to the real crises. The 2013 horse meat scandal in Europe, or the constant challenge of responding to something like a salmonella outbreak.
Those events just shattered consumer confidence.
They did. And traditional tracking methods, paper documents, databases that don't talk to each other, it meant tracing a contaminated product to take weeks.
Weeks is a catastrophe when you're talking about public health. So what does blockchain do for traceability, for that farm-to-fork journey?
It brings two things: immutability and speed. It creates this continuous, unchangeable record of a product's history, its specifications, its location, every single step. And that transparency saves money, but it also cuts the response time to a crisis from weeks down to minutes.
Minutes. Okay, we have to talk about that speed because it sounds almost unbelievable. The Walmart pilot programs are the famous example, right? Tracing mangoes.
This is where it gets really incredible, and it shows the operational power. In those pilots, they used a system on Hyperledger Fabric. When a problem was identified, the old way involved staff calling suppliers, digging through invoices. A total mess.
A manual nightmare.
Exactly.
Right.
Using the blockchain solution, they traced a specific mango from the store shelf all the way back to the original farm in 2 seconds.
2 seconds
Yeah.
versus days or weeks. That's not just an improvement, that's a revolution in risk management.
It means less waste, fewer recalls, and a much, much faster resolution to a potentially lethal problem. And it's not just for giant corporations either. We see this everywhere.
Like where?
A company called Provenance is using a hybrid blockchain model with simple SMS messaging, just text messages, to trace sustainable tuna catches in developing markets.
So the tech on the ground can be simple.
It can be. But on the high-tech end, you have companies like Ripe.io, who created what they called the Internet of Tomatoes. They use IoT sensors to track individual tomatoes.
Tracking what exactly?
Not just where they are, but granular data. Sweetness levels, texture, ripening records, all that data secured on the blockchain helps prove quality.
And major retailers are pushing this even further. We saw Carrefour in Europe is using it for preventative health.
Their approach is incredibly robust. They're tracking all 6 traditional elements of traceability, but also genetic origins, what inputs were used, disease information. They're trying to use that data trail to actually predict allergens and pathogens.
Wow. Okay, so moving from physical goods into the purely digital world, let's shift to personal data, to identity, where trust and immutability are arguably even more important. Data breaches are just a fact of life now.
And that's because our identity, our usernames and passwords, they're all controlled by these huge centralized entities. The solution being developed here is called self-sovereign digital identity, or SSI.
So instead of letting a big tech company hold my data, I control it myself.
That's the idea.
Yeah.
You, the individual, gain autonomy over your identifiers. SSI lets you share proof of your identity, like, say, I am over 18, without actually revealing the underlying document, like your driver's license, to a third party. It completely shifts the power dynamic.
What does that look like in a field where privacy is legally mandated, like healthcare? I'm thinking of HIPAA in the US.
In healthcare, the potential is enormous. Blockchain offers immutable protection of patient data, which is obviously key for HIPAA compliance. But beyond that, it helps track medical supplies to fight counterfeiting, and it provides this armored vault against the theft of genomic data, which is a growing threat.
The biggest headache in healthcare, though, is getting different systems to talk to each other. EHR interoperability. How does blockchain solve that without just creating one giant centralized database that becomes a huge target?
It requires some very clever cryptography. They use what's called a consortium blockchain, like Hyperledger Fabric, and a privacy mechanism known as proxy re-encryption.
That sounds dense. Break that down for us.
Okay, think of it like this. You have a digital safe with your medical records inside, and only you have the key. If you want to share them with a doctor, you don't give the hospital your key. Instead, you give the hospital system the proxy, a special mathematically generated tool. This tool lets the hospital transform the lock on your safe so that now only your doctor's specific key can open it. The proxy itself can never see what's inside. It's just a secure courier.
Security through math. That's pretty elegant. Okay, shifting gears to civic life. Voting. This idea has been trialed in a few places. What makes a blockchain ledger better than, say, a traditional voting machine?
In elections, trust is absolutely everything. A blockchain offers an immutable, incorruptible database. Every vote is 100% verifiable, and since it's distributed, tampering is nearly impossible. We've seen it used in Thailand's Democrat Party primary in 2018, and there are trials in places like Estonia.
But hold on, that raises a huge privacy issue. If the ledger is transparent, how do you keep the vote secret? How do you prevent someone from seeing who I voted for?
That is a critical challenge. And the short answer is more advanced cryptography, specifically something called zero-knowledge proofs. We can circle back to exactly how they work, but they are essential for this to function.
Okay, let's move to a couple of industries that are just, plagued by fraud and a lack of trust. Let's start with digital advertising.
The digital ad model is a leaky bucket. It's full of fraud bots pretending to be people, ghost sites running invisible ads. Advertisers are paying for eyeballs that don't even exist.
So how does blockchain fix that?
Through smart contracts that verify every step and gather what's called proof of human activity.
Proof of human activity? That sounds like something from a sci-fi movie. What are they actually measuring?
It's highly technical, but it's things that bots find hard to fake. IP address verification, the specific speed and pattern of mouse clicks, how fast someone scrolls, all of it gets recorded immutably. It just wipes out a huge amount of ad fraud.
And by making it transparent, it cuts out the middleman.
Exactly. If advertisers and publishers have this shared verifiable ledger, they can connect directly. They don't need all those layers of ad networks and data brokers taking a cut. NASDAQ is actually already doing this with their blockchain exchange, NYIAX.
What is NYIX? What are they trading?
They're trading future ad inventory. It's a financial market where a publisher can sell a guaranteed contract for ad space months in advance. The blockchain ensures the contract is transparent and immutable. It turns a murky transaction into an auditable financial instrument.
That's a huge injection of integrity. And finally, for creators, intellectual property, a constant battle against theft.
For IP, blockchain is a powerful deterrent. It provides immutable proof of ownership, a time-stamped registration, irrefutable evidence of first use, and smart contracts can automate royalty payments in real time directly to the creator whenever their work is used.
Okay, we've covered solutions that offer 60% cost reductions, secure our medical data, solve billion-dollar fraud problems. If the benefits are this clear, why aren't we all living in a blockchain world already? What's the friction?
It really comes down to cost, complexity, and governance. On the tech side, scalability is still an issue. For something massive like a national election, high transaction volume can still cause congestion and slow things down.
And just plugging it into old systems must be a nightmare.
Integration is hard. Fitting this decentralized tech into legacy systems that are decades old takes a huge engineering effort, and that costs a lot of money up front.
And from a governance side, the tech is borderless, but the laws aren't.
That's a huge challenge. There's so much regulatory uncertainty. Companies are hesitant to invest millions until there are clear standards across different countries.
So let's go back to that tension you mentioned with voting, the privacy versus transparency issue. How do you solve that?
This is where the innovation is really exciting. It relies on those zero-knowledge proofs, or ZKPs I mentioned. A ZKP lets you prove a statement is true, like, I am an eligible voter and I cast one valid vote, without revealing any of the information behind the statement.
So if I understand this, the network can verify my vote is legit and I haven't voted twice, but it never knows my identity or who I voted for.
Precisely. It's like proving, the password to a safe without ever saying the password out loud. The math is enough to confirm integrity while preserving total anonymity. It's essential for democratic trust.
That ability to innovate past the roadblocks suggests that adoption really is a matter of when, not if. So what are the immediate future trends we're seeing?
The future is all about convergence. We're seeing blockchain merge with IoT sensors to provide these real-time, secure data streams, tracking shipping containers' temperature, a patient's vital signs, and ensuring that data is trustworthy from the second it's created.
And where does AI fit into this?
Smart contracts are getting more sophisticated.
Yeah.
You can integrate them with AI to automate complex decisions. For instance, automatically triggering an insurance payment when an IoT sensor shows that a shipment got too hot, all without a human needing to step in.
So the blockchain is the trust layer, IoT is the data, and AI is the decision maker.
Exactly. And finally, we're seeing huge growth in sustainability, tracking carbon credits, proving ethical sourcing, making a company's environmental claims auditable and unchangeable.
This has been an incredible deep dive. We've gone so far beyond crypto and into the real nuts and bolts of commerce, health, governance. The core value, it seems, is its ability to generate verifiable mathematical trust in places that are either decentralized by nature or just historically riddled with fraud.
And that verifiable trust is changing everything. Despite the initial costs and the resistance from old systems, the move towards modular hybrid blockchain solutions is making it easier.
Hybrid, meaning a mix of public and private systems.
Right. It means you don't have to rip and replace your entire system. You can just apply this transparency layer on top of what you already have, which makes adoption cheaper and, I think, inevitable.
So we'll leave you with this to think about. Blockchain offers the power of self-sovereign control over your own identity and data. It promises a level of security that centralized systems just can't match. So, beyond finance, given what we've explored today, what is the one area of your digital life where you would demand a transparent, immutable blockchain solution tomorrow? Securing your medical records, ensuring the integrity of your vote, or maybe taking back control of your social media identity. We'll catch you next time on The Deep Dive.